Now for Global Business Updates, Rotus Oddiri joins us.
Good morning, Doctor. Good to see you again. Welcome back. Rufai, Vimbai. You know your names rhyme, right? Rufai and Vimbai. Okay, all right. Good morning to all our viewers out there. We begin in Asia with the Caixin Services Purchasing Managers Index for China. Basically, this is a survey that the government carries. Well, Caixin does this, Caixin Global. So basically, that's with S&P. They basically ask manufacturers, hey, how are your orders going, inventories, blah, blah, blah. But this is more on the services side. You can see it came in at June 51.2, the forecast was 53.4, and May was 54. So it's been slowing down. There's a chart, let's put up this chart here that really tells the story of the services. Look at this. From post-reopening for COVID in China, it went as high as 57 points. If you're above 50, you're expanding. If you're below 50, you're contracting. And basically, you can see the trend line slowing down, from June 2023 to August or September. And since that time, it's been in the low 50s. So still, it's about the slowdown in the Chinese economy. Let's get to stocks. Taiwan is so far, because it's half year, every time you get to July, you look back on the year, see which equities have performed very well. The TAIEX is the best performing stock index in the Asia Pacific. APAC is the Asia Pacific region. So from January through June, TAIEX has returned 28.45. In second place is the Nikkei 225 in Japan, 17.56. Third is the Nifty, which is in India, and the Sensex. You can see India has two indexes there, 10%, 9.4. The Kuala Lumpur Composite in Malaysia, 9.31. You've got the Kospi in Korea, 5.37. The Hang Seng in Hong Kong, 3.94. The Straits Times in Singapore, 2.89. ASX 200 in Australia. Look at the CSI 300. That is China. It tells the story of China weakness, basically. But hey, look, if you're looking to diversify your portfolio, go outside, spread your money around. From Asia, we go to Europe, over to Portugal. We talked about this briefly yesterday. So there was, of course, the ECB Central Bank Forum. You see Christine Lagarde flanked by Mr. Neto, who's the head of the Central Bank of Brazil to her left. To her right, Jerome Powell of the US Federal Reserve. Basically, data ruled the day. I think we have Powell coming first, where he says, look, inflation has been coming down, but it's still a data story. Here he is.
This is, we've made quite a bit of progress in bringing inflation back down toward target. While the labor market has remained strong and growth has continued, we want that process to continue. I think the last reading and the one before it in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path. We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. That's what we've said, and what we'd like to see is more data like what we've been seeing recently. We'd also like to see the labor market remain strong. We've said that if we saw the labor market unexpectedly weakening, that is also something that could call for a reaction.
All right, let's listen to Christine Lagarde, also towing the same line. It's data.
Most recently, we have seen in our round of projections, which are really important, September, December, March, and June, we've seen that 2% target with an oscillation of 0.1 about it at the last quarter of 2025. So it's on that basis and on the basis of what I'm happy to describe as, the three-leg reaction function, and all the underlying data and information that feeds those three legs, that we decided to do a 25 basis points cuts. But in the same breath of air, I also said that it was not a linear process, that it was not a predetermined path that we were embarking upon, but a step that would be followed by further review of data, further understanding of where our three legs reaction function would be.
All right, let's take a look at this chart. This is a really, charts tell all the stories. Look at the inflation trajectory for Brasilia, the EU, and the United States with the flags, right? Going back to July of last year. You see the European Union up at about a little over 5%. Look at the trajectory where they've come all the way down to 2.5 as of yesterday. You've got Brazil in green, where they were climbing to 5%. They've kind of moderated a bit, but just around the 4% region. And then you see the United States treading water at about 3%. So that's the inflation story for each of those countries and what these central bank governors are essentially chasing after. Let's get to Nigeria. Taiwo Oyedele, the round peg in the round hole, the tax man. He's been putting his head down and working. He announced this yesterday. A simplified and business-friendly withholding tax regime has been approved. He says it's going to be published and gazetted over the next few days. He talks about withholding tax being introduced in 1977. Let's get to the 7 items that he's pointing to that need to be sorted out in terms of withholding tax, right? So he says exemption for SMEs, reduce rates for firms with low margins, so the lower your profit margin, you don't need tax eating into that. Exemptions for manufacturers.
Media.
Exactly. Exemptions for manufacturers and producers. Measures to curb evasion, minimize tax avoidance, ease of obtaining credit, chances to reflect emerging issues, and so on and so forth. So there's a lot there with what he's been working on in terms of trying to get withholding tax to not be as much as a burden on businesses. Finally, I heard what you all talked about with respect to imports, reducing Nigeria's import dependency. And Aliko Dangote, what he was saying about the high interest rates. There's one thing that was left out though, and that is even President Tinubu said he wanted lower interest rates. But you can't get lower interest rates
with inflation.
Not one, inflation. You're fighting inflation. You're also raising interest rates. And then the monetary policy, money supply is expanding. Do you know where we are now?
100 trillion.
100 trillion.
That's a big problem.
So, and then they also announced they're going to give, I think it was how many billion to the manufacturing sector. You're handing out palliatives. You're doing all these things to expand fiscal policy. Of course, monetary, inflation is going to be high. Rates can't go down.
I mean, that's a very great point because that's also fueling inflation. 100 trillion. The central bank has been trying to mop up all this money. But it's a big, big debacle. And it goes back to the politicization of that Naira redesign policy. Because if that policy had been allowed to work, not because
Under
of
whose administration? Under whose administration?
Politicization?
No, the Naira redesign now.
Under Buhari's administration.
Yay!
Yeah.
All
right. You're not serious. I tried to scotch your point. But we know the people, we know the governors that went out and said no to this policy because they wanted money for elections.
See, wait. Do you know why there's no cash in ATMs? Is anyone surprised?
No.
They are deliberately trying to limit the amount of cash that's out there.
Because there's so much already in circulation.
Exactly.
Over 100. Wait, let's allow CBS it officially.
No, it's there. No, this one is there. Data is there. Yeah.
So, but because that's another big problem, and that's pushing inflation up already. So, President Tinubu initially wanted low interest rate and climate. But you're dealing with a lot of inflation. He wanted low interest rate climate. His decisions pushed us to 11% add-on inflation. That's about 3.9% now. We are dealing with that quagmire. At the same time, you're dealing with another level of, apart from the inflation, there's another level of stagflation because there's no growth. The growth is not as palpable as we want it to be. And you're also dealing with diminished disposable income. Because that's another even big factor and that's why when I was giving recommendations, I said the first thing, let's even pass a minimum wage bill so that the workers know where they are going, so that they can know how to plan and see how they can inject money. Excellent point, but you know that this minimum wage will be inflationary. Because your productivity does not match the amount of money you're giving to the truth is, it's going to be inflationary. Any big spending in the economy is going to be inflationary. But at least inflation that is now targeted towards productivity. Right. Not this kind of inflation we have where you have 100 trillion in circulation, we don't even know what's going on. I get you. So that's just it. At least let's even have disposable income.
I think interest rates are such a big conversation globally right now, as we can see what's happening with the EU conversations as well. But China, I never thought we'd get to the day where we'd officially see the impact of the world no longer buying from China as much as they used to. Since COVID, of course, that was a pretty, drastic line in the sand. But, when you look at some of the statistics, it's also because the US, for example, is not cutting rates anytime soon. So what are they doing? They're not importing as much as they would. You look at the African situation as well. We're not importing as much from China as well due to a number of different factors. So, it's interesting to see China, who built this, they have their 20-year plans and so forth, who built this vision and probably never foresaw the day that the world would potentially turn on them. So I know the Politburo is now going to have to, go back to the drawing board and figure out, I know some of the factors as well. They're talking about property downturn and government debt. I mean, gosh, the entire world is facing similar challenges in different ways. So because the Chinese have always been innovative, if I may use that term, or different maybe is the more correct word, in how they tackle their economic challenges, especially because they're very, very loyal to their ideologies. But we're seeing this continued departure from socialist and communist policies. So it's going to be interesting to see later on this year when the Politburo meets how much exactly they're going to gravitate away from the socialist economy.
I agree.
Okay, for the purpose of clarity, Alhaji Aliko Dangote was speaking in terms of the difference between what caused inflation in the US and in Europe. And he was saying that it was because of the stimulus, over 8 trillion that was provided. But that here, the situation we have, we didn't provide any stimulus. We had something we call palliatives after the crisis of COVID-19 and all that. And the reality here is that we have too much money chasing few goods, because the manufacturing sector, as was pointed out at that summit, is performing below capacity. That is just pure common sense, pure simple economics. But what is even more important is the fact that he made the point that the Monetary Policy Committee of Nigeria has met 3 times this year. They have increased rates 750 basis points. It has not made any impact. Instead, it has worsened the situation. That's the paradox that he was trying to point out. Now, we go straight to Sintra, Portugal, where they have this meeting of central bank governors. There was something that Christine Lagarde said, which I found interesting. She was talking about swiftflation and swift economics, that referring to Taylor Swift. And she was saying that, look, people are so excited about Taylor Swift affecting the economy in Europe, but it's not Taylor Swift alone. Bruce Springsteen, Sting, and other groups that had issues. But the point is that the sticky point in Europe is services inflation, which remains very high at 4.1%, whereas headline inflation and core inflation have gone down, to about 2.5. What Jay Powell was saying is that, yes, the US is also on a disinflationary path.
That's right.
But the challenge they have is that he's still looking at the data. And he doesn't expect that inflation will go down to about 2% until late next year or early 2026. So in the US, although some people are saying we'll see rate cuts this year, but Jay Powell, the man in the driver's seat, is telling us that, look, he's still not sure about the data. It needs to be very sure. Finally, in Greece. Greece has introduced a 6-day working week.
That's right.
Minus tourism and the people in services sector. But the Greeks, they work more than everybody in Japan,
they are productive.
In US.
And they are
UK.
productive.
That's the question.
Yes.
Does it mean that if you work more, it will enhance productivity?
That's a good question. Because
the trend in the world is that people should work less so that they can relax more.
And then work smarter.
But that's the argument.
No, but that's their point. They want to do it in order to enhance productivity. I mean, you have to work. As doctor said, you have to work smart. If you work smart, do that. Yeah. So
if you work smart,
we'll see how it works out. We will see how it works out. It's an interesting experiment.
Rotus Oddiri, good to have you here in studio.
Thank you.